Hello and welcome to Find Your Freedom, a podcast dedicated to helping you truly find freedom in all aspects of life. Join your hosts and their expert guests as they share practical tips and strategies for finding more freedom in your life. It's time to take control of your life and create the future you want. Let's find your freedom. Here are your hosts, Lenny the Boss and Omid Rad Investor.
Boom, boom. We are back with another episode of Find Your Freedom. And before we start, just want to let you know that this episode is being brought to you by Wealth Builders Mortgage Group. If you need a mortgage for your personal home, if you need a mortgage for an investment home, that can be a long-term rental, that can be a short-term rental, this mortgage group is where to go. I use them. Omid used them. They take care of you. Believe me, especially if you're in the short-term rental market. It all starts with a call. So book your call, and I'm telling you, you will not be disappointed, and this is due experience. So with that being said, we got a great guest on today, and this is going to be a little different today. All right. So a little background on him. Bitcoin mining made simple. He's the founder and CEO. He helps investors unlock passive income through fully managed Bitcoin mining. So please welcome Beau Turner. Beau, how you doing? How you feeling today?
Hey, thanks for having me. It's a great day to be on with you guys and appreciate you having me.
Awesome. Hey, listen, truth be told is we never had a guest with anything got to do with Bitcoin. Okay. So this is going to be pretty interesting. But before we get there, tell us about, where you grew up, where you're from, and how did it all lead up to you getting to this Bitcoin thing?
Yeah, so I originally was raised in Alabama, moved over to Texas to go to school, started a real estate company while I was there doing single family and some commercial office buildings across the Southeast. And 2020 changed a lot of things for a lot of people. One of them for me was realizing that I was no longer that passionate about real estate. And I also wasn't that passionate about living in Texas. So I moved up to Oregon with my now wife, and we got just all the way into the Bitcoin space. And that's a long story that I'm going to make really short, but suffice it to say, started liquidating all my real estate in 2020, and now I'm fully into Bitcoin and Bitcoin mining. But having come from real estate investment, that gives me kind of a unique view into it and helps a lot of people bridge that gap when it seems really unapproachable and a little bit too strange and hard to put your hands on.
Pretty interesting. Pretty interesting. So, man, I mean, we're real estate investors, and Parker and I love it. So, so you said that you liquidated all of your real estate, dude. What happened and why?
So the gist of it was I was doing every manner of like wholesaling, creative financing, owner carry, subject to fix and flips, whatever you can think of. I was doing in our real estate. Recognized that going from deal to deal was not my passion, and particularly managing tenants also was not my passion. And the further away that I was physically from my properties, when I was living in Texas, for example, I had some rentals still in Alabama where I was from, the more of a headache it was, and the less I loved it. And I think real estate is a great vehicle. Don't get me wrong. I think in a sea of things that you can pick from, people that pick real estate, good move. But Bitcoin had been kind of in the background for me for a few years. It first came in my awareness when I was in college, and I got a little bit of it and thought it was really interesting. Definitely appealed to my more freedom-minded kind of libertarian sensibilities. But I didn't really see the potential. I didn't see the long view of what this would become in terms of global assets. But as soon as 2020 came around and you saw Michael Saylor starting to get on more podcasts, starting to describe this asset in a way that hadn't really been described in that way before, where he was speaking to an institutional audience, to a sophisticated investment audience, it clicked in a different way for me. And I really believed in the promise of getting into Bitcoin, but I love getting cash flow. I mean, if there was one thing that I didn't want to give up, it was cash flow from rental properties, cash flow from notes that I was holding. And so the only way that I could figure out to get cash flow in the Bitcoin space that didn't take undue risk was actually making it. So setting up computers and contributing energy and computing power to the network and getting paid in Bitcoin. And effectively, it's the closest thing to having a real estate investment in the Bitcoin space. If you think of it like
Okay.
every miner is a multifamily unit, we joke internally that we're developing micro condos. You get 1 square foot and a dryer plug. Is how we talk about our data centers when we're just joking. But really, that was the reason, was to get cash flow in what I believe is the best money in the world.
So I'll be honest, I've got Bitcoin and I dabbled in it, but I'm probably the maybe one of the worst Bitcoin investors ever. I don't know where it is or what it's doing. It's out there somewhere on the something, the cloud or the I have a wallet. Yeah. So I might need to talk
Yeah,
to
I
you, Bo.
know.
I might need you to hopefully maybe I'm a millionaire and I don't know it with Bitcoin. I don't know. But
The best
so
thing you can do with it is just leave it somewhere and forget about it for 10 years. So you're doing the right thing.
okay, good.
As long as
Just
you
keep
can
your wallet,
keep
Parker.
access to it.
Gotcha. All
Yeah,
right.
that wallet, that 24 character password or your toast.
Well, and then like I think I invested it on something that like you can make a oh, I'm trying to think of how they described it. Like you put it in and you get a return, but and then the return can kind of diminish over time. So I don't know what it's doing now, but we
Yeah,
might
so
need to talk about.
that's actually one of the reasons that I actually picked mining. Was if you're describing, like, some people will say buy Bitcoin and then put it on a platform where you can get yield, sort of like having a high interest savings account or high yield
Mhm.
savings account. And that has repeatedly led to people losing all of their funds, and I very narrowly escaped one of those misadventures. I had plenty of other misadventures, but that one in particular was a near miss, and, part of why I got into mining was didn't wanna take that kinda counterparty risk of putting something that I consider so valuable in the hands of someone who, if they financially are mismanaged, completely blow up and lose all your funds.
Definitely. Okay, so talk to our audience out here. If you're like I am and just don't know the term, like you get the concept, but you don't really understand the terminology. Where would you even recommend somebody start?
Well, I would have usually said you should start by just buying some on an exchange, which is effectively like a stockbroker, but for Bitcoin and other cryptos. I personally am only involved in Bitcoin. I had years where I would mess around with other coins and figured out that that was a losing strategy, highly speculative, and I was really looking for something more like real estate, where it's the sense of security and an institutional asset, not some highly speculative potential 100x. So when I think of Bitcoin, to me, it's a very risk-off play, which is something that most people don't understand if they don't have a long background in the research of it. But for me, it's the least risky thing that I could own. And so getting your hands around it, probably the easiest way is going through an exchange. But we've also found in the mining business specifically that a lot of our hosting clients, they're setting up their first Bitcoin wallet like with us. So, I can now say, shameless self plug, that if you're just getting into it, you can just call me or my team and we'll help you set up a wallet. Obviously, I think mining is the best vehicle to get into it. And it's also got those tax advantages that real estate comes with. So you've got physical machines that you get to depreciate, you've got operating expenses. It's kind of like buying a business in a box. And that's a great way to accumulate Bitcoin in a way that you're not, throwing out 100K and then you're mad when it goes down 20%. When you're mining, it's like you're procuring an asset at a discount.
Hmm.
Hmm.
What's the cost? I mean, when you talk about equipment and like, what is that even on a high level or in depth level? What does that even look like?
So basically, you're buying a computer, and that computer lives in a facility. You can absolutely run them in your garage if you want, but typically you don't want to maintain it, and your home electricity rates don't make a lot of sense. So what we've done is we've actually set up data centers along the Columbia River, and we've got heavy industrial electric rates. So it usually ends up being half or maybe even 20% the cost of what you would pay, depending on where you live in the country, and it's fully managed for you. So at a high level, you're buying a computer. Our top of the line computer right now is about $10,000. That is producing Bitcoin 24/7 right now on a monthly basis. At the mid part of June, one computer at that range is producing like $500 worth of Bitcoin and costs about $225 in electricity to run every month. So you're effectively on an operating basis making Bitcoin at a 50% discount. just sort of like going back in time and buying at a lower price.
Interesting.
Yeah, no, that's very interesting. I'm gonna be honest. With all the coins, I kind of lost interest after they buddies of mine said, "Oh man, you have to pancake this and you have to pancake that. You got to get the VPN and got to go out the country to get back into the country to pancake it." And man, I was pancaking all night. And dude, I started at 9 p.m. and I didn't finish my pancake until about 4:30 a.m. I said, "Oh, this is not for me. I can
We hit a
do this
we hit a
anymore."
new low when Coinbase listed fart coin a couple weeks ago.
So can you do? Are you into the pancaking thing? And if you can, I can't even explain what pancaking is. Like, can you give an idea what pancaking is? Does this relate to
So
the
I think you're
Bitcoin as
talking
well?
about Pancake Swap, which admittedly that's like way far out in the world that I no longer inhabit. And it's part of like what you're describing is the reason that serious investors don't really look at this space often is because there's so much jargon. There's so many, frankly, jokes of ways to get into it and be involved in it. And that was part of me saying, listen, hard line, I'm not going to mess with anything except for Bitcoin. I really believe that this is a human a good for human civilization, and it's a fundamental technology and change in the way that we operate around money. And pretty much everything else is a distraction, speculation, a joke, even in many cases. And so, no, I have not messed with Pancake Swap ever, actually. But
You made me
this
hungry,
is the
Lenny.
but this is the thing. It's like it's a mindset of many people get in with very short-term thinking in the crypto space in general. And if I could shift your perception to be in line with what I think is the healthiest way to look at this, specifically Bitcoin, is it's a long-term savings account. It is not something you trade in and out of. It is not something you're trying to get yield from. It's not even really an investment if you're looking at it the right way. It's truly just saving in the best asset that you can.
Hmm.
So sometimes I hear stuff of legislation, regulation, that kind of thing, but I don't know enough about Bitcoin to understand what would be positive and what would be negative for it. So can you touch on, you know, legislation, regulation wise, what we do would or wouldn't want to occur?
Yeah, so we've had a really interesting last 12 months in the space and overwhelmingly positive. When we were under the last administration, there were essentially just regulation by enforcement across the board. So, not really giving clear guidelines to the industry, a lot of targeted companies, and what changed was the new administration is very Bitcoin positive. And in fact, we went from people worrying about, is this going to get banned by the government, to a couple months ago, we got a strategic Bitcoin reserve. So we have a US strategic reserve of Bitcoin that's about 1% of the supply, and that can never be sold. And they're looking at budget neutral ways that they can acquire more. And so that was extremely positive in terms of removing most people's greatest fear for this industry. But without going too deep down the rabbit hole, I would say the next dominoes to fall and the most important dominoes for investors regard to tax law. So
Mm-hmm.
for a while, you could hold Bitcoin on your balance sheet if you're a public company, and it would be subject to indefinite intangible accounting, which meant that if I bought Bitcoin at 100K and it went down to 20 and then back up to 100, my Bitcoin on my balance sheet would be forever marked down to 20K and could never be marked up no matter how high it went. So that changed. As of last year, we now have fair value accounting. So public companies that hold Bitcoin, it's no longer this horrible stain on your balance sheet that never gets marked up again. But that changed recently so that you actually can reflect your gains, and that makes it a little bit more attractive when you're presenting on your quarterly earnings calls. The other thing that I would say is most important is a removal of capital gains taxes when you're using it for transactions. So it's very hard if you want this to be your daily money for you to go pay for a Starbucks, for example, and have to pay for a capital gain on $4. Like that's just not practical to keep track of. And so there's these little things that just make it a little bit too high friction for people to use on a daily basis. That as those sorts of really just tax law changes come into effect, you'll see it much more and more prevalent and get much deeper market penetration.
Pretty interesting. So let's back this up here, and let's first talk about, because we're gonna have our audience gonna be listening, and they're gonna be like, all right, so Beau, he was a real estate investor. He dumped it for this, so this must
I
be
hope
good.
my husband doesn't listen.
So
I don't.
I got- so this must be good. So who is the target market for this? Like who are the individuals that are like gold to enter into this? Let's start there. Like who are those folks?
I really it's a spectrum. So I'd say it's a sliding scale. And I've been consistently really surprised by this because you might think, like I thought getting into the mining business, I thought, okay, most people are going to be like me. They're going to be younger, kind of tech forward professionals who just want a,
So, but can I just stop you
yeah,
real quick, just to be clear? Mining versus just going onto Coinbase and buying a part of Bitcoin are two
they
separate
are
things.
two completely different things. Yeah. So
Okay,
when you
cool.
go on
All right.
Coinbase,
I'm gonna make sure that's on the record.
you're buying the asset essentially like you're going to the market and just buying food. Mining is like I set up a farm and I'm growing my own food. So that's the best analogy that I have. Or say, like going to the store and buying milk versus having a cow that's producing milk for you. Mining being owning the cow and having milk produced for you. So,
Okay,
in
that's good.
terms of
Yep.
demographics, both in mining and actually purchasing the asset, I had that expectation. Younger, definitely more tech savvy, and I was wrong. I was totally wrong. A huge portion of our clients are 50 plus, not tech savvy at all. In fact, many of them come from a real estate background, and this is maybe the most tech heavy investment that they have, but we've got a huge amount of them come, and I'm not, um, I just wasn't expecting this at the outset, but the people that are signing up with us in many cases are not experts in the field. They haven't done a ton of research. Like they're, as I said before, setting up their first Bitcoin wallet with us. And so that was not at all what I was expecting. And when I first started building the company, we were really looking at just offering the service of, we set up the data center, we'll help you procure the computers, we'll run it for you, hands off, but like go educate yourself, or we're assuming that you're already educated. And what we ended up developing is pretty much a full stack education and media company to serve the people that are coming to us, and they've got questions, and they often have the same questions over and over and over again. We're like, well, we could keep on just having one-on-one calls with everybody, but it probably makes sense to just build some really high quality media. So we've really been education forward and generating a lot of YouTube content, short videos, long form podcasts, so that people can go really as deep as they want. And back to the real estate analogy, this can be as turnkey and hands off as you want it to be, like getting a turnkey rental property with a property manager installed who handles tenants, collections, maintenance, everything, and then you only see a check and a tax report at the end of the year. Or you can go extremely deep and come to all the educational calls, come out to site visits, really make it a learning journey. And that's probably the most satisfying thing to me is when people choose to invest not just their money, but their time and their energy to understanding the space. Because I think it totally reworks how you see the investment landscape over the next couple decades if you can understand this one niche.
So real quick, Parker, let me just jump right in. So individuals come to us, come to Parker, come to myself, come to me and say, hey, I'm having a tough time at my job, and I'm looking to do something that's going to replace my job income, and then I can grow it. Right. So obviously, we help them, with real estate. We say, hey, these are some of the things you could do to help out with that. Right. So are you saying that people are taking the same effort, same mindset, and saying, hey, my job sucks. I don't have no time for my kids. I don't have no time for myself. They work me to death. They pay me a little bit of money. What else can I do that's going to replace that? Is this mining that, or is this just something to add to the portfolio?
It can be either. And I will say the easiest way to get into it is truly just with your money so that you're setting up a passive income stream that's managed by someone else. And that's the core, fundamental layer of our service is just income that doesn't require extra time from you. But our largest clients, people that are spending multiple millions with us, are often using us not just to provide a service and help them get income that's hands off, but also to help them develop their own projects. So it can actually shift into, do it with me and then I help you do it. And then you might still have us manage it or joint venture with us. But especially the more that you learn about the space, the more you find people looking to get deeper and more deeply involved. And that can be extremely active, to the point of setting up your own data center. But at the core, people are usually not looking to trade more time for money. They're usually looking to trade money for more money.
Interesting. So when you talk about income streams, so I know you gave the example of $10,000 to buy a computer, generating about 500 per month, electricity costing about 225. So I'm doing the math there, and it's going to take a long time to get back your $10,000 initial investment. But I think the other piece of that is as you mine this, the value is growing on what you mine. Is that correct?
Exactly right. And so if you just assume that we're in a static vacuum and Bitcoin stays at 100,000 for the next few years, it's going to take you about 3 years to get your money back if you're selling all of your coin to pay for that electricity bill. Historically, though, mining is just like a leverage bet on buying Bitcoin. So over the period from 2020 to 2024, if you bought Bitcoin January 1 and then sold it 4 years later, it's about a 6x on your money. If you were mining through that same period, it's right around a 10x. So it's like a way of playing in the Bitcoin space that can actually get you a little bit of extra upside. And um, to your point, the reason that you get into this is not necessarily so that you can just sell your Bitcoin to make cash flow. It's been a really good move to hold on to Bitcoin for 10 years plus and kind of forget about it and just let it accumulate somewhere. So a great example of this is one of our technicians. He's been in the space longer than I have. He's been mining since 2012, which is a really long time in an industry that's only really was born in 2009. Um, he has a story that he's mined well over 100 Bitcoin, but does not have those Bitcoin because he paid for electricity with many of them. So if you look back, that's about a $10 million opportunity cost as we sit today. And so, what we encourage people to do is, assuming you've got an investment portfolio, a job, it makes a ton of sense to just set aside dollars and pay for your electricity bill and let the Bitcoin accumulate and not plan on selling it, at least not for a long period of time. But similar to property, even if it appreciates a ridiculous amount, it's not that you have to sell it. In fact, if you sell it, you're incurring capital gains tax. And most people that are savvy in real estate are not liquidating properties every few years. They're borrowing more against their properties every few years to expand their portfolio. So same thing with Bitcoin. You accumulate enough of a stack, you can actually borrow against your Bitcoin and never have to sell it, but still fund a improved lifestyle or additional investments just by taking those and collateralizing them to get more funds.
All right. Okay, so let's get back to this target audience thing, right? So, let me know if I'm hearing this correctly. So, in the real estate world, you can come in so many different ways. You can come in with some money. You can, right? You can come in with no money, and you can come in with knowledge. You can partner up with someone who's going to give you the money. You can get a loan from the bank. You can get a loan as low as 3.5%. So you need a loan for 100K, you coming out your pocket 3,500 bucks plus some closing costs. So is the target individual someone that, if they're living paycheck to paycheck, because it sounds like you need to have some type of money to get started. Am I hearing that correct? So what kind of money are we talking about? 5,000, 1,000, 100 bucks, 10,000. Like, what is that? Hey, this is the number you should be shooting for. And when you have this will put you in the best position to succeed.
So mining specifically, I probably wouldn't look at starting with less than 10K. You can get in lower than that.
Okay.
I mean, you can find cheaper machines, and we even have them around 6,500 at the low end, and they're still efficient. But if you're starting with less than 10K, I would say it makes more sense to just start dollar cost averaging into Bitcoin. And then at the point that you've got enough liquid that you can spend 10K and have that longer time preference, that longer time horizon, then it makes sense to get into mining. But you don't want to not be, in my view, accumulating Bitcoin because you're waiting to get to 10K. I would just start dollar cost averaging, because this is something that, for example, in my earliest exposure to this, I didn't go all in with every bit that I had. I set up what I'm really happy to say now in hindsight, in 2015, a $10 daily buy on Coinbase. So it just automatically bought $10 a day of Bitcoin for me. And
Now we're talking about buying. We're talking about buying a
yeah,
coin now,
this is
right?
just buying the
Okay.
coin. So
Separate from
yeah.
minding, because I want our audience to make sure that they're clear.
Yeah. So I didn't have
Okay.
10K liquid as a college student at that point, and I didn't, as much as I wanted to, I didn't buy a miner and run it in my college dorm room. It was much easier for me to just get an exchange account and start buying $10 a day on an exchange, and that worked out very well. Um,
Pancake.
yeah, that was years before
Just
Pancake.
joking. Go ahead. I'm just joking. Go ahead.
But no, you can start with anything. I mean, you can buy cents worth of Bitcoin. You don't have many people are like,
Yep.
"Oh, Bitcoin's over 100,000, like it's too expensive. I'll never be able to get one." No, you can buy pennies worth of Bitcoin if you want. It's just, in my opinion, a mistake to have none.
Do you remember, Beau, in 2020, that spring, Bitcoin was $8,000? I
Yep.
bought like a portion of a Bitcoin. I should have bought a whole one.
Hindsight is 2020, right?
Yep. Yeah.
All the time. All the time. So, all right. So, if you want to be a minder, right? Is that
Miner.
how you call it? A miner?
MINER. Yeah.
Gotcha, minding. So if that's what you want to do, you say, hey, the best way is somehow, some way save up 10K. And one of the ways to do it is because you don't have a lot of extra income, take whatever you have and start buying coins and let that be a driver to help you get to that 10K. Once you get to that 10K, use that 10K to get into the minding side.
100%. And the important thing here is it's a mindset shift around what is the thing that I'm holding that's of value. Because even for me, I have a quite a portfolio of miners personally, but my goal is not to accumulate the most miners, it's to accumulate the most Bitcoin. So mining is just the vehicle that I've chosen to do that. But ultimately, the asset is not this computer with a finite lifespan. The asset is the Bitcoin. So, as long as mining is a strategy for you to accumulate the most Bitcoin over time, then it's a good vehicle. But I would not stop someone from accumulating Bitcoin just because they can't get a miner. They should start buying, whatever they're comfortable with. I mean, whether it's a 1%, 5%, 10% portfolio allocation, I would just be building up that position, because that's my long-term position. And the miners are, again, just a vehicle to A, get more Bitcoin over time with the same capital outlay, or B, get tax advantages. So if I've got income that I've got to offset, whether it's active earned income or business income, I'm looking at mining as not just a way to earn Bitcoin, but also to offset income through depreciation, through operating expenses, essentially all the benefits that you get for operating a business rather than buying Bitcoin with after tax income.
All right, Parker, let me, my mind is just blown here. So let me go. So, all right. So cool. All right. So let's just say that, I'm ready. Man, this sounds good. I'm ready.
He
So
is ready.
I give you my 10K,
Yep.
right? Everything gets set up. The miners start going in, doing this thing, the computers, right? And what if after 7 months, I sit here and say, you know what? This is not for me. Now, in real estate, when you buy an asset, if the asset holds its value, then you could sell it and get just about all your money out or
Mhm.
more. 7 months in, a year in, 2 years in, whatever. Does this work the same? Can I just say, hey, I'm done with this. Do I get more money back? Maybe, close to it. Like how does that part work?
Yeah, so you've got when you're getting a computer from us, you own that computer. So it's totally your call what you want to do with it. When people start with us, we do 12-month hosting contracts to start out with, because I think anything shorter than 12 months and you're not really giving it the shot that it needs, it's kind of like not uh, to analogize it back to real estate. If you buy a property, let's say you're trying to buy a rental property and you buy and sell it within that first year, it's kind of like you got a lot of value eaten up by the fees that you pay to agents and closing costs, and like the transaction fees really don't make it very smart. So you really would like to hold a rental property for probably 5 years or more on the short end if you're really playing it the right way. So miners, you absolutely can, if you buy it and then immediately resell it if you want. But I would say 12 months is a minimum to give it its fair shot. And a really ideal time frame would be probably 3 years to see it return that more Bitcoin for the same capital outlay. Um, that said, yes, you can resell your miner, and not only can you resell it, and I want to be really careful here because this doesn't happen every time, but you can actually resell the same miner for more than you bought it for, depending on what's going on in the market. So a great example of
Gotcha.
this would
Okay.
be
Makes sense. Like real estate. Yeah.
2020. 2020, people were buying brand new machines for $2,000, and then 2021 was a wild year for Bitcoin and Bitcoin mining, and it was extremely profitable toward the end of 2021. That same computer you could have listed for $15,000 and got it.
Wow.
So quite an appreciation schedule. But I say that I got to caveat this because if you do it the opposite way, where let's say, we're at 100K today, you buy a miner, and then 6 months from now, we're down at 75, mining economics aren't looking as strong, then that computer is not going to be producing as much income. The market is not going to give you as much as you paid for it. So it really correlates to how much income that computer is producing on a daily basis. And
Yeah.
just to
Okay. Makes
clarify as well, when I said that $10,000 computer is making, $500 a month, that's just based on today's numbers. So if, say, tomorrow we shoot up to $200,000 Bitcoin, that same miner, all things held equal, might be making you $1,000 a month, just as an example. So the income of these things, it's not like a fixed rent check every month. It really is like a market-based commodity system when you're selling into it.
So are these not like a hardware, like where the computer is? So it's not based on. I'm having a hard time understanding how it's not based on like the hardware components of the actual machine versus the income potential. Although if I think about that in real estate terms, it makes sense. But do you see what I'm saying? Like the components for the.
Yeah, so the components have value. So let's call the components like salvage value. Like if I were just to sell the power supply and the control board and these standard components that go in a computer, it's always going to have a residual value of a few $100. But the main driver of value in miners is what they're producing in terms of income. Because this is not like a general purpose computer that you can go and fold proteins or run GPT with. Like all it does is mine Bitcoin. And so the more profitable or less profitable it is at doing that one task denotes how valuable it is to the market. So
Okay.
the same computer in a different market condition can carry different value, even though the components are exactly the same. And they're always getting better as well. So the ones that are released today are, 10, 15% more efficient than the ones that were released 6 months ago. So you've always got that kind of steady march of technology improving as you go. So you want it to make a return within that first few years, so that you've either got the capital to upgrade, or the investment is returned on itself when you get out.
Interesting.
All right, I might ask a crazy question here, so bear with me. So the goal here is that you are going to mine for a Bitcoin, correct?
Yep.
So when you find a Bitcoin, you're extremely excited, right? Like I did it, yes, I got the Bitcoin here, boom, right? You know, so at that point in time, Bitcoin is valued at $100,000. Am I up 100 grand once we find this?
So this is
Because me and Parker about to go in right now. I say,
Calling it
Parker,
out.
put up your 5K. I'm ready. So, because if all we got to do is find one coin, 100K, and let's get up out of here. But go ahead.
So short answer is yes, you can do that, and no, most people don't do it. So I got to explain a little bit about how it works. So the network, to simplify it, is like a lottery that happens every 10 minutes. So there's millions of computers around the world guessing trillions of times a second to find this essentially random number that gets you that Bitcoin that's released every 10 minutes. The odds of you with one computer finding that next block and getting right now what's 3 1/8 of a Bitcoin every 10 minutes that gets released to the network is like 1 in 54 million. So it's going to take you statistically many years before your computer ever finds that block and gets you the Bitcoin if you're just going at it alone. So what most people have done, just like in the lottery, you can have a lottery pool where you're going through and buying with say like a group of your friends and everybody's pooling tickets, and then if you get it, you split it evenly or in proportion to how many tickets you bought and contributed. That is mechanically how it works nowadays. So there are people that are just lone ranger going at the network with their one machine or thousands of machines and trying to get the block. And they're expending energy and hoping that they are the lucky ones to get that block. But most people, especially the ones that want stable income, are joining a pool where you're paid for the work that you contribute. And as soon as the pool or someone in the pool hits that block, it goes to the pool and then gets split among everybody who's giving work to that pool in equal amounts or in proportionate shares to, if I've got one machine and you've got 10 on the pool, you're going to get more of that proportion of the reward than me, even if my machine was the one that found it, because we've all agreed that we're going in together to try to find this block. So that's how you get stable income. But we do have clients who say have 5 machines that are pointed at pools and they've got stable income. And then they've got that one machine that's like their ever present lottery ticket that every 10 minutes, that machine has a chance at winning 3 1/8 of a Bitcoin. So right now, 330K or so.
Interesting. So let's ask the doomsday question here. So as we like with any investing in anything, prices can fluctuate. But I just have a hard time wrapping my head around like what would be the doomsday for Bitcoin. I mean, Gen Alpha doesn't want Bitcoin anymore, so nobody invests. I mean, like, how does this? Like, what's the worst case?
Yeah. So you can break risks into different categories. There's like technical risk, market risk, geopolitical and regulatory risk. I would say that the most severe risks to the network are behind us when it was quite small and it still had the chance of kind of being snuffed out by a single government. At this point, and this is way too deep of a conversation to go into here. At this point, the Bitcoin network is like essentially a cockroach, like the closest thing you can get to a digital network cockroach, where short of the entire Earth facing a nuclear apocalypse, you cannot shut this thing down. It literally runs on tens of thousands of computers around the world where you'd have to shut down every single computer at the same time into far into the future for the network to be stopped. And then you could just restart it whenever you get one more online. It doesn't even actually require the internet. That's one of the misconceptions is
Interesting.
yes, the internet is the most convenient vehicle for us to access this, but actually if you just have radio signals, you can access the Bitcoin network. And in fact, that's how most of Africa uses the Bitcoin network is,
Interesting.
uh, you know, essentially Nokia phones communicating over short band radio. And that's really the use case of where this is most actively used is where there isn't a whole lot of financial infrastructure, and you can have a fully fledged financial system without needing brick and mortar banks. So to answer your question, I don't see a lot of technology risk. Quantum computing is a longer conversation, but there's kind of safeguards in place for that. Um, I would say market risk is your biggest concern is like, what if people don't like this anymore? And all I can say to that is that the trend is very much in favor of people continuing to like it and want more of it, and the biggest pools of capital in the world saying we need to get some of this.
Interesting.
Well, staying there, right? Like, you know, um, Warren Buffett says something like this. when everybody's buying, you sell. When everybody's selling, you buy. Does this now Warren Buffett's a smart dude. Now, does this apply for this as well? Because I'm hearing that this thing, obviously, you just kind of mentioned that it's growing, right? It's favorable.
Mhm.
So, is there a time, like, how do you know when to say, hey, man, I'm a party up in the air, or hey, man, I'm out to party, I'm gone? So how do you know?
So there's so many different answers to this. I would say the best mindset to adopt is a long-term accumulation mindset. So Warren's also famous for saying the ideal holding period for an investment, a good investment, is forever. And when you find that right asset, that right investment for you, that you should be an accumulator and a holder, and really you're not ever planning to sell. I mean, Warren is famous for holding things, for decades at a time and never doing anything but adding to his position. And in my opinion, Bitcoin is one of those assets where there's going to be booms, there's going to be busts, but you should be building a position around this kind of in all market cycles. And just to be prudent financially, there's going to be times where you had a, let's say, 5% allocation to Bitcoin. And over the course of a few years, that becomes a 50+% allocation. Now, I'm okay with that because I understand what I own and own a business in the space. So I would say that I have a certain edge and a risk tolerance for the space that maybe is uncommon. But for most people, if something that previously was 1/20th of your portfolio becomes half of it, you're going to look to take something off the table so that at a minimum, you're insulated if the market turns against you and you don't have to make the decision to sell at the wrong time. So even let's say if you want to be accumulating more Bitcoin forever, you might identify a time where it makes sense to take some off the table so that you actually have dry powder if you think that there's a correction coming. Now, I'll caveat that by saying that many people have missed the train because they thought, oh, I'll just trade in and out of it. And my goal is to accumulate more Bitcoin over the long term. And I'll trade in and out of it so that I end up with more Bitcoin. I'll sell and buy at the right time. I don't know about you guys. I never sell and buy at the right time in the market. I don't have a great track record with that. So, to the degree that I can set up automated systems and frameworks that are just continuously helping me accumulate and keeping me insulated from any kind of black swan event forcing me out of my position, that's what I'm doing. I'm not a trader. Don't come ask me for trading advice. It will not be good advice.
I feel that. Yeah.
Well, I mean, this has been a very insightful conversation, very different, mind opening, you know, um, getting to understand that there's other avenues out there to park your money, getting a clear understanding of roughly how much is required for this type of investment. And dude, we would really love to sit here and have more because I do have more questions. I really want to wrap my hand over, but I do have one question for you. What does find your freedom mean to you?
So I had to wrestle with this for a while because when I first heard this, it was actually from my favorite real estate coach who probably helped me most, not just in real estate, but in life as well. He said, Beau, when you find freedom, it just means that you've got to have responsibility to balance it. And I think at this point, finding freedom to me, I had a resistance to that as a young guy. I thought, no, freedom comes no strings attached. Like I don't need to find responsibility just because I've gotten freedom. But I've grown to appreciate what he meant. And so I would say now that finding my freedom means finding responsibility that I can fall in love with.
I like that.
Love it.
Yeah.
Love it. Well, listen, there's going to be a lot of individuals going to really find what you said intriguing, really going to want to learn more, and probably ready to write a check and get involved. So, with that being said, how can people get in contact with you?
Yeah, appreciate the opportunity to come speak to your audience and you guys are great. Um, the best way for people to find us is through our website, abundantminds.com. That's MINES.
Oh, that's
You can
cute.
also find us on social media. So we've got a YouTube channel, Instagram, Twitter. Our handle on pretty much everything is at Abundant Minds, and that's where you're going to find all the educational content. So if you had questions that weren't answered in this segment, then more than likely I've had to make a video about it and answered it with some graphics and some pretty pictures and video. Even you can see videos of the data centers, the sites, how we procure our energy, and pretty much anything that you would ever want to learn about Bitcoin. We are seeking to make the highest quality content for. So find us on social and our website, and really just appreciate you guys having me on. This has been a blast.
Awesome. So we're coming to the episode where we're about to end the episode, and what we like to do is we like to have this big boom session. So what happens here is I count to three, 1, 2, 3, and then all three of us is going to say boom as loud as we can and hold it as long as we can in a uniform manner. So give me some thumbs up if
I
you're
got
ready.
you.
All right, all right, all right. So on 3, 1, 2, 3. Boom! Awesome, awesome, awesome. Check this out, man. We just had a fantastic episode with Beau, which was a little different than we usually talk about when it comes to real estate. But we all know that you need to diversify. And we all know that we need to sit here and make sure that there are more than just one avenue when you start to make some money from your job, from your real estate, from Bitcoin, right? You need to start to put those in places that's going to help you grow. And Bitcoin is just one of them. You can reach, Beau here. He can tell you much more about it, how to get involved. Hit up the website, hit up the Instagram, and check it out. And for us to bring on more, guests just like Beau that can bring you this different type of information, we need you to leave us an honest 5-star review. That's the way that we bring it. And also, we need you to share this episode. We need to share this with your mother, your brother, your sister, your cousin, your aunt, your uncle, all your coworkers, the ones that you like and the ones that you don't like. Until the next episode of Find Your Freedom, we talk to you soon. Peace.
Thanks for listening to Find Your Freedom. Be sure to subscribe wherever you listen to podcasts. While you're at it, please help us spread the word by leaving a rating and review and sharing the podcast with friends, family, and colleagues. Until next time, get out there and find your freedom.